Hey everyone, and welcome back to The Chart Wrap by True Options Masters. I am your managing editor, Mike Merson, and we're here to talk about the charts I covered this week in your weekday True Options Masters content. Now, if you like these videos, be sure to hit that like button down below. You can hit the dislike button if you don't, but I don't think I'll see them, and I don't think anyone else will see them. So, put that in your pipe and smoke it. Definitely also subscribe to the channel, and subscribe to True Options Masters if you aren't already. We have great stuff coming out every single weekday. We have trade ideas, we have charts, we have education, we have everything you need to start your options trading journey. Now, it was a pretty weird week. Markets got a little topsy-turvy. We had Omicron, no one knows how to say it, variants of COVID. We have the Fed getting real hawkish out of seemingly nowhere, because we've had a very dovish Fed for quite a while. So we have a lot to talk about. And before we do that, check out my sick transition. Whoa! Yeah, very impressive. All right, we're not going to start on the euro. We are going to get there. We're going to start on the S&P 500. So we've been watching this chart for a while. We have our blue uptrend line going after the initial pandemic bounce. We have a hit here, here, and so on. But what it looks like to me is that we've rejected off this blue line. This trend, this very beautiful uptrend that we've enjoyed for the past 2 years, I think it's over. Now, I don't think we're going to see a market crash. Don't get me wrong. But this beautiful, uninterrupted bull trend, it's going to get a little hairier. And that's okay, because as options traders, we love volatility. And if you're an options trader this week, you hopefully had a little fun. Let's zoom in a little bit on what's going on. So here we are with the S&P 500. Broke down from the blue trend in September, reclaimed it slightly in November, broke down again, tried really hard to reclaim it all the way through November, and now we're in December, and we are definitively rejecting this blue trend line. Now, does this mean all hope is lost? No. We have a lot of things kind of holding us up at the moment. So obviously markets are bouncing a little bit today. I'm recording this on Thursday because I'm going skydiving tomorrow and won't be recording a timely chart wrap for you this week. I apologize. But nevertheless, markets are bouncing this Thursday. We have a carry through tomorrow. I mean, how much further would we really need to go? If we really, let's say 2% tomorrow, I would call that a pretty promising recovery from this drop. But right now, the market's kind of in the hands of the headlines, unfortunately. We have the Omicron variant. We have a very hawkish Fed all of a sudden saying, we might need to taper bond purchases a little sooner. And if we're accelerating that timeline, we're kind of logically also accelerating the interest rate raise timeline as well, which will weigh on stocks. I'm almost thinking that the Omicron stuff is not what investors are worried about. It's higher interest rates. Now, fundamentally, that's, there are a lot of issues with that. The fact that we can't raise interest rates from zero without markets panicking. But do I think that the Fed's going to go out, pull a Volcker, and raise rates to 10, 20% overnight? Absolutely not. That would destroy our entire financial system, more than likely. I think the Fed is, like Mike Carr pointed out in his monthly market outlook earlier this week, you should check that out. We'll have an annotation somewhere up here, maybe over here, for you to go check that out while you're watching this. And he thinks that the Fed is going to do whatever it can to soothe markets, and I have to agree with him. So I think we're more than likely to see a recovery out of this lull, and we'll probably see it sooner rather than later. It looks like, so you'll notice these three lines I have. These have become kind of a permanent fixture on my charts lately. The red line is the 20-day on this chart EMA. The yellow line is the 50-day EMA, and the blue line is the 100-day simple moving average. That's the exponential moving averages, these two, and this is the simple moving average. Exponential moving averages are simply weighed towards more recent data, which is why they're good for short-term moves like we're seeing here. So, did not hold the 20-day. did not really hold the 50-day, but we closed back above it today. So the violence that we saw in the yesterday session kind of feels like a fake out move. We're also reclaimed this yellow support line here that was formerly resistance after we hit that line, broke down below the blue trend line, met some resistance of it here again, and then retested it, and now we've been well above it. So we're back above this yellow trend line. We are back at levels in the stock market that we first saw, I will emphasize that we first saw back on October 28th, which is just over a month ago. So there's a lot of panic happening right now for a stock market that is virtually unchanged in just over a month. I think it's a little bit overdone. Now, not every chart in the market looks as promising as the S&P 500 right now. Let's look at small caps. Oh, small cap investors, what a time you have been on this year. Let's just bring this sad thumbs down arrow down a little bit and move our drink over. So here's that trading range we've been talking about between 211.50 and about 234. Small caps just stuck here all year, up, down, and turned around and upside down. Finally got a breakout. Oh my God. November 8th, we saw a new high in small cap stocks and fell back down, tried to bounce a little bit, and then really started to fall. And then, when Black Friday came last week, it was just a bloodbath. But what do we see here? We see IWM having a nice martini and bouncing off of this yellow 211.50 level once again. Is this time to bid small caps on a recovery? Potentially. We do have some funky stuff happening on the moving averages, though. So the moving averages on IWM, quite unlike SPY this year, are very, very coiled. So energy was building up here for quite a long time, and we burst out of it to the upside. But now we have the shortest term moving average, the 20-day, crossing below the 50-day. No bueno. If this continues and we cross below the 100-day simple moving average, we'll have the first real bearish cross since back here in July. And in July, we kind of chopped around and we found support at this horizontal again, but we're already at that horizontal now. So if we get more follow through and we see a bearish cross, we'll exit this channel to the downside and stuff will get real ugly. So small caps, I think, are going to be one to watch. They were one of the hardest hit when the pandemic hit initially in 2020. And I think if we're going to see bearish action in the whole stock market, we're going to see it in the small caps first. So keep your eye on the small caps. Hope that this martini gets us back at least into this range and ideally back up towards new highs. Maybe, just maybe, this 20-day EMA will bounce off the 50-day EMA in tomorrow's session. Who knows? Maybe there will be carry through. The post session is at pretty much the high of the day. Maybe the futures overnight will play nice with the small cap investors. Until then, though, you want to be playing this range, definitely. If you haven't already bid calls on IWM, there are worse spots to do it, but you want to set your stop at this 211.50 level. If we close below that, the next day better be really, really nice bounce. Otherwise, things look pretty ugly across the board. To clarify, I am still bearish. I'm bullish stocks. I'm bullish crypto, and we'll get to that in just a second. And I think you want to be bullish so long as we're having a very easy monetary policy. Once the rates start to go up, if it happens too fast and too severely, that's going to weigh on stocks. But right now, that's not what's happening. You just want to keep an eye on the charts and keep tuning into Chart Wrap, where I keep an eye on the charts for you. Let's move on to tech stocks. Talked about tech stocks a little bit this morning. So less of a definitive uptrend in tech stocks. You can't really do the same thing with SPY that we see here because we just chop right through the action. More so, we have a rising wedge happening in tech stocks, or has been happening for about a year and a half now. So it formed since back here in September 2020. We've been chopping up in this tighter and tighter range, finally broke out of it, came back down to retest, broke out of it again, So what does this mean? This actually feels pretty bullish to me. Now, I hope that doesn't sound contradictory to you, but the tech sector is different from the small cap sector. And right now, it's been the winner this entire very, very long bull market. It's going to continue to be the winner, in my opinion. And we're seeing tech stocks bounce very, very strongly today. We're nowhere near, I don't want to say nowhere near, we're fairly near the 50-day EMA. And we closed right back above the 20-day EMA. And we haven't even revisited this, which we just broke out of, as support. So is there a little room for tech stocks to come in here? Yes. Do I think that's going to happen? Not necessarily. Let's take a quick gander at the RSI and see if we can spot anything. So we have an RSI coming in. We're basically neutral for the moment on the RSI. And we're at levels that we were at, once again, at the beginning of November. Not even, like the second week of November. So tech stocks were more overbought here, according to the RSI, than they are here at extremely similar levels. That to me says tech stocks actually have room to run higher. Yes, we have a bearish cross on the MACD on a daily basis, but those do not always manifest in prolonged bears, or not bears, bearish periods, you could say. Yeah, essentially, like I was saying the last few weeks, you still want to be on guard. I've been warning about a correction the past few weeks, especially based on the action in SPY with the long-term trend line. So you want to be on guard, but you don't want to throw in the towel here. I mean, I like Mike Carr. I think this bull market keeps going longer than anyone thinks it will. I think it goes out at least through 2022, and by Mike Carr's estimation, it could go all the way out to 2024, where we'll see S&P, what's he thinking? 11,400 is his estimation. That's hugely bullish. That's close to a double, or more than a double from here. So you want to be keeping that in mind as well. Now, let's talk about what's going on in crypto land. This is Ethereum charted against Bitcoin. This is a chart that a lot of Ethereum proponents, such as myself, like to watch, because Bitcoin's been the king of the cryptos for ever. Since cryptos were a thing, Bitcoin has always been number one. A lot of people, including myself, seem to think Ethereum has a lot more utility, is being used by more people, has more development activity, and thus should probably be number one. Now. What do we have here? Let's just look at the long-term daily chart here. This is basically where Ethereum started existing. This was the 2017-2018 bull market where Ethereum just went nuts against Bitcoin. It went all the way up to 0.15. At today's prices, that would take us to something like $8,000, $9,000 per Ethereum. So what do we have here? We have a really definitive breakout on the ETH BTC pair. Let's just zoom in on that just a little bit more. So we've been hitting these lower highs, but also higher lows for a really, really long period here. I mean, this goes all the way back to May of this year when Ether really started to make its run and reached, this was probably when Ether, this was in May. So this is when it hit 4,400 for the first time. Now we're seeing Ether break out of this pattern, and it doesn't even seem all that willing to come down and retest it, to be perfectly honest. So what does this mean? This is a significant breakout. This is a long-term significant breakout. We have a series of higher highs and higher lows on the ETH BTC chart, and you have Ethereum near all-time highs. I don't think this crypto cycle is over. If you own crypto, I don't think right now is the time to be selling it unless equities go seriously risk off. But even then, I don't think we'll get nearly as low as the pandemic low when Ethereum was going for like $80. I think Ethereum sees new highs within the next 3 to 6 months. Really the next 1 to 4 months at this point. And I think one day, I do think it will overtake Bitcoin and become number one. Now, whether it's a sustained place at number one, or it blips up and then shoots right back down, is a different thing. But in the long run, I do think Ethereum will be the number one crypto. And if you believe that, then you want to watch this chart. Because when this chart breaks out and when this chart's making new highs, that means you want exposure to ETH. And you want exposure to other altcoins, which is the vast majority of my crypto portfolio. So that's going to do it for this week's chart wrap. We covered legacy equity markets. We covered the euro. And we covered Ethereum. So if you like this content, be sure to like our video, be sure to subscribe, be sure to give it a comment, all the things that all the YouTubers tell you to do. You can hit the notification bell if you want, but I don't know what sicko wants notifications for YouTube videos. It helps the channel. It helps the channel, like I said in my last video. And that's going to wrap it up. I hope you all have a wonderful, wonderful weekend, and I hope you enjoy continuing to read True Options Masters, the greatest options trading newsletter in the world. And I'll be back to you next Saturday. Bye, everyone. Have a great weekend.